Hello, Sector Watchers. Welcome to the show. This is a special edition of Sector Spotlight. My name is Julius de Kempenaer, and I am recording from Redmond, Washington this week with a very special occasion. And I'll introduce that to you later. Ladies and gentlemen, this is Sector Spotlight. And the special occasion for this show is that I have the opportunity to have my good friend Ralph Acampora as a guest here in the studio in Redmond, Washington. And Ralph doesn't really need a lot of introduction, but for those of you who haven't heard of him, it's almost impossible. He is one of the founding fathers of the CMT Association. He was at the forefront of getting the CMT designation recognized by the SEC. The man has done so much. But the reason that we're talking to him today actually starts back to when I've got a question for you.
Yes.
When did we meet for the first time? I know, do you remember?
It was in Ireland.
Absolutely,
Yes.
in Dublin.
Yes.
IFTA conference, Dublin, Ireland, 1991 or 92?
I think so. 91 or 92, I think.
91,
right.
92.
Yeah.
So that's how long we go back.
Yeah.
And I think we've seen each other pretty much once or twice a year ever since. Because, I'm in Amsterdam, you're in the US, back then in New York, now Minnesota. But our paths have crossed many, many times. And if we look back, I mean, you're a little bit further ahead of the curve than me in age-wise, but I think we've done a lot of similar things. And right now, we both run a farm.
Yeah.
So we shovel manure. That's what we do. No, the reason for this show, guys, is after the pandemic, StockCharts hosted a new version of ChartCon in 2022. So we hadn't done it in 2020. And 2022 was the first time that at least I could get out of here and a lot of other people could travel again. StockCharts hosted ChartCon here in Redmond. We had it here in the studio. It was a great event. Ralph was one of the guests. And at the end of ChartCon, we had a little get-together with cocktails and drinks and canapes, and we ended up sitting there with Ralph and his nephew, Jay Woods, and myself.
Yep.
And we had a very interesting debate and about trading and about investing and how things evolved. And of course, Jay is he's on the floor of the New York Stock Exchange. He's floor trader. It's all about trading. And you were more like on the charts. And I remember that Jay and I were kind of picking on you, that you didn't understand trading. So, like bids and offers and sizes and depth of book and all that kind of stuff and how computers are working. And I just need to look at the charts and it's all fine. And so we had a few drinks, but it was a funny conversation. And then we started, the discussion went to relative strength and relative strength analysis, and of course I threw in some RRGs there, and you said like, "Oh, I've never done that like that. I've always done it like this." And then you started to talk about a concept that absolutely triggered me from a professional point of view, because it was so close to my heart, so close to RRG and relative strength analysis, and a way in looking at it. And that's what I want to talk to you today about and bring that into the conversation. And if you, I actually already wrote an article about ARGoN. We're gonna explain later why that is and where that came from. Yeah. But the folks, you can go to the website, to the RRG blog, and there is an article. April 27 was actually during the CMT Association conference, written on ARGoNs, and this is the moment. Here in Redmond, Washington, in the hotel where we had that debate. This is Jay and Ralph. And for those of you who don't know it, Jay actually has the honor of saying Uncle Ralph, because he is your sister's son.
Yes.
Right? Yeah, so he's your nephew. I didn't know that by then, but it's really cool. So tell us about how that discussion started, because we were kind of making fun of you. And then you started basically put us back in our corner, like listen.
All right.
So
I slapped you on the hand.
Yeah,
and
a little bit.
Yeah. Well, listen, we all look at relative performance. We do.
Yeah.
And I've been doing that. It's called comparative relative strength. You're comparing something to something else. And I had a lot of institutional clients over the years working for the firms that I worked for. And of course, they wanted the institutional portfolio manager. He lives to do one thing, beat the S&P 500.
Absolutely.
Because if he continues underperforming, guess what? He gets fired.
Gets fired.
Yeah, so, and that was what we all looked at. So what is comparative relative strength? Well, your stock versus the S&P. It outperforms, the relative goes up. If it's even with the S&P, the trend of relative is flat or neutral. And if it's underperforming the S&P, the relative is down.
Yeah.
Very simple.
It's easy as that.
Three simple categories, and we go on and on and on. And where this all started, Julius, is that I think it was in 1999. I was at a retail conference for Prudential, very large audience, and I talked about the relative performance of sectors and everything. And after it was over, a couple of gentlemen came up to me and said, "Wait a second, I don't understand when you're talking about relative." I said, "What do you mean?" He said, "Ralph, you said that if I'm up 25% and the S&P is up 30%, that's bad because I'm underperforming the market." He said, "That doesn't make sense to me. I'm up 25%. Who cares where the S&P 500 is going?" And I just sat and listened to him. Another fellow came up and said, "Ralph, wait a second. You told me if I'm down 25% and the S&P is down 30%, that's good because I'm beating the S&P 500. I'm losing 25%. What are you, nuts?" So these guys kept pushing me. And I went back and, this is retail. This is not institutional. And they were looking at it completely different. And I started asking audiences, if your personal portfolio, do you want to make money, profit, or do you want to beat the S&P 500? All the hands go up and they say, "We want to make a profit. Who cares about the S&P 500? I never forgot that. I went back to the office, and for days I was doodling around and checking price and relative and the trends. And all of a sudden, I don't have 3 categories. I came up with 9 categories of price versus relative. And I in my classes, and I taught for many, many years in Wall Street, New York Institute of Finance. And when I got to the point of comparative relative, I said, this is what the street looks at, these 3 categories. I said, I kind of think you should look at it this way. And, I did that for years, and no one really ever followed up. And a few institutional clients or retail clients I would show it to. And until you and I and Jay sat down, because you picked up right away and said, "Hey, give me that again." And you were writing it down while I was talking.
Yeah.
And I, in a way, I was so happy that happened, because I jokingly call you the spin doctor, because you spin all these sectors around. And I said, "Gee, I wonder if he could spin 9 of them."
Yeah, so it's like
that's how it started.
Yeah, you can see it on the screen right now. This is actually you gotta make an image in your head of that setting of the 3 of us sitting on a bench in a hotel having a drink, and then Ralph basically, you don't have charts, you don't have computers at hand at that time. Yeah. I started like drawing in the air, like, oh, this is going up and this is going sideways and this is going down, like literally what I have on the screen right now. Yeah. And then in the next step, he actually moved on to putting those 9 categories there, and that's the 9 categories that we have. So Ralph put it price on the vertical axis and relative on the horizontal axis. And as he said, there is a positive, a neutral, and a negative. And you can just, scribble them up and down. And I had to, at the spot, I had to actually sort of make that image in my head and come around it and figure it out.
Yeah, you did the computer version. And
later on. But in the beginning, I had to sort of do the scribbling, and it's scribbling in my head. And then when I we'll talk about that in a minute, how that evolved later on to figure that out. But this is actually how we started talking about that, and how you started explaining what it actually was. And I had to, in my head, I had to visualize those 9 buckets or 9 categories of the chart, and imagine how that will work. So you started doing that, as you said, when you started doing the retail stuff.
Oh yeah.
So how did that evolve? Did you actually continue doing it, or did you just stop doing it?
No. every Sunday. In the old days, there was a chart service called Mansfield. Mansfield was hand delivered to my house because I wanted it as soon as I could get it. I didn't want it Monday morning. I wanted it Saturday or Sunday so I could sit down and go through all of the stocks. They had all the S&P 500 stocks in there, and I would look at, and they had price, and they had a lot of fundamental information, but they also had this comparative relative strength line. And so I started each week, with a glass of Merlot and my Mansfield. So,
of course.
So M&Ms. And I started calculating what the moving averages for I did it specifically for the Dow stocks because it was easy to do the 30 Dow stocks, and they were important. So it gave me a different view of what's going on.
Right,
and I've been doing that ever since.
Yeah, and because I know that we talked about it before. When you were done, you had all those symbols because you were recording the ticker symbols in those buckets. What was your take on how would you read the result, the end result, when you had those 9 buckets filled, and there are tickers in different buckets? How would you take? What would be your take from that? How would you process that information?
Well, what I did is I took a percentage. How many are positive, how many are neutral, how many are negative, and I'd say which ones were positive, and which neutral was price relative and S&P relative, and that was obvious. And I noticed that whenever a majority of them shifted from neutral to positive, I said, oh, that's the beginning of probably a pretty good move, upside. Or if it shifted to more neutral to negative, I said, oh, there's internal. I won't say it's an infallible indicator, but it supports the move. And it, in a way, shows me that there's a shift, and that's what I wanted to see.
Would you call it a breadth indicator?
In a way, yes.
Sort of a breadth indicator, because you're sort of counting number of stocks.
Yes.
That will fulfill
exactly.
that.
Yeah, very well said. Yes.
So, so that's where we ended. The conversation in the hotel. And I couldn't let it go. So I had to actually work on this, and then.
Well, you and I communicated.
Yeah. So when I go, I promised Ralph I need to work on this. I need to chew on this and see if I can figure this out and maybe make it a little bit more modern and more computerized version of it, so that we don't all get drunk doing the S&P 500 every Sunday. Because that's the result. If you do it, 30 Dow stocks, that's like half a bottle of Merlot, I guess. But if you do it with the S&P 500, we'll be...
You're gone. You're under the table.
You're under the table, so the last 200 charts will be very, very easy. So the problem was, and I got to go back to that image, that scribbled image that Ralph showed me, in the hotel. And you may want to notice that a price starts at a negative, neutral, and then goes positive. But the relative starts at positive, neutral, and negative. And that was something that held me back for quite some time, because it wasn't until I started trying to put this into some sort of a computerized model that I realized that this is kind of counterintuitive, because a computer likes stuff to be in sequence, so 0, 1, 2, 3, 4. And especially when you make a grid, it likes both axes to be in a similar sequence. And this obviously is not doing that. When you do it on a piece of paper on Sunday night, it doesn't really matter, because you know what's where. So that took me a little while, and I had to actually come up with another sort of grid, which became the grid here, and we also, because we were discussing, this is after the hotel, I was going back and forth with Ralph on some calls, and when I figured out that I had to so price negative, neutral, positive, and relative needs to be negative, neutral, positive as well, and then we would have 1, 2, 3, 4, 5, 6, 7, 8, 9. And we were discussing how we got to call this. What is this? And I think we got Acampora's 9, the 9 of Acampora. Acampora's 9 was a little bit like Ocean's 11.
You did that.
Yeah, I did that.
I didn't.
No, yeah, but I know that for something to stick in people's heads, it needs to have some sort of
rhyme or something.
Yeah, something that people remember. So the first thing that popped in my mind is Acampora's 9, because it's like Ocean's 11 is a famous movie. So it's like, well, Acampora's 9 sounds pretty good, right? So, but at the end of the day, we went back and forth a little bit, and we came out on Acampora's relative grid of 9. So that is where it's coming from, and that alliterates into a mnemonic that we now call ARGoN. So ARGoN is Acampora's relative grid of 9. So that is how it now lives.
That's you composed that.
I composed that, but consulting you and how we do that.
I'm going to set the record straight. I mean, you took that piece of paper of mine and you turned it into what we have today, and I thank you for that, because I don't know anything about technology. So
no, well, I mean, that's why I'm kind of 20-something years younger than you, so that's fine. That's fine. Okay. That's my job, and I'm happy to do it.
Yeah.
So that's where we ended, and we can now look at those charts, and I've actually created a version where it's a little bit more modernized, and the problem that you will run into when doing this type of analysis is that if you eyeball the charts, it is a very subjective way of doing it.
Yes.
Because you look at a chart, I look at a chart, someone else looks at a chart, and we probably get to 5 different interpretations. That's a joke.
Yeah.
But 2 or 3 is very possible. If it's neutral or positive, that's a subtle difference.
It's debatable, I guess. Yes.
So when you computerize stuff, computers don't like subjective stuff. They need some no rules. So I played around with some stuff with some moving averages and kind of things to make it a little bit more computerizable. And the good news is that everybody who wants to use this methodology can actually use their own interpretation. If you're a super short-term investor, you may want to look at shorter-term trends. If you're a little bit longer term, you want to look at longer term trends or whatever in between you have. Sure. And you can look at, take a 10-day moving average. So if price is above a 10-day moving average, that's a plus. If relative is above a 10-day moving average, that's a plus as well. You got 2 pluses, goes in bucket number 9. Yeah. If price is above its 10-day moving average, but relative is below its 10-day moving average, price is a plus, relative is a negative, so you go in bucket number, and I need to look, number 3. So that is how you can actually make it your own, basically, and tie it to your own analysis. Yes. And that is what we came up with, and I want to kind of leave it at this, because this episode of Sector Spotlight is for our Evergreen channel, where you have episodes that you can watch back later. So it's the why and the how and the behind the scenes and the behind the charts version of StockCharts.com. And this is the story of ARGoN. Let's call it the story of ARGoN, how it evolved, how it came to life, and how we can use it today. And I'm going to wrap this show here, Ralph. We will be back, because you're going to sit in that chair with me for another at least 20 more minutes. And we're going to take a look at the actual position, actual state of the market of the 30 Dow stocks through Ralph's eyes. I'm going to flip 30 stocks to him. He's going to tell me plus, minus, neutral, etc. I'm going to record it. And we're going to come up with the actual condition of ARGoN as we speak of today. So we're going to end this version of Sector Spotlight right here. It is connected to the one that we're going to record after, and you can look it up on the actual current StockCharts channel in the Sector Spotlight group. Ladies and gentlemen, thank you for watching Sector Spotlight. I hope you enjoyed the show, and I'm looking forward to seeing you again with a new episode of Sector Spotlight.